Hello all, my name is Arvind. I am a legal intern in LEXIS and Company for the month of June. I am a 4th year student from UPS Dehradun, and today in this video I am going to talk about agriculture income and how it's being taxed. So let us first understand what actually is agricultural income. So any land which is situated in India and is used for the purpose of agriculture or cultivation, or any land derived from such land by the way of doing agriculture on that land. Also, the income which is derived from such land, including processing of the agricultural produce raised or received as rent in any kind of or any process which has been used by the cultivator or received as rent in kind so as to render the produce fit for the market sale. Now, considering all the above that we talked about, income generated through a farmhouse will be considered as agricultural income. Income derived from seeds and sapling grown in a nursery is also considered as agricultural income. Now, condition for income to be considered as agricultural income. This include firstly the existence of land. Secondly, the land should be used for agriculture purpose. Agricultural operation or purpose means effort induced to grow crop out of the land in use. Both rent and revenue derived from such land are exempted from taxation. Thirdly, cultivation of land is a must. So, some level of cultivation on the land is necessary for it to be considered to be used for agricultural purpose. Now, fourthly, ownership of the property is not necessary. It is essential that the SSE who receives any rent or revenue from the land has some vested interest to be eligible for tax-free income. But it is not necessary that the person who is carrying out agricultural activities is the owner of the land. Now, let us talk about certain income which are treated as agricultural income. So, this include first rent received from agricultural land. Second is income from sale and replanted trees. Third is income from growing cheap creepers and flowers. Fourth is income from sale of seeds. Fifth, when a firm is engaged in agricultural activities and the thesis has a share of profit in it. And lastly, if any interest is received on capital from a firm engaged on agricultural activities. Now, let us talk about the tax on sale of agricultural land. Before the year 1970, if any profit was earned by selling or transfer of agricultural property, it was considered to be generated from agricultural land, and hence such proceeds were exempted from taxation. The court also supported this proposition, but through a retrospective amendment, this position was changed in from April 1970. After the amendment, a land was considered an agricultural land if it was not situated in an area which come under the jurisdiction of a municipality or a cantonment board, and the population of that area was not more than 10,000 or more, according to the last census which has been published before the first day of previous year. Now, any land which qualifies the above mentioned test is not to be considered as part of the capital asset, and there can be no capital gains on the sale of such land. Any agricultural land which does not satisfy the above test will be considered as capital asset, and proceed from the sale of such land will be considered as a capital asset and will be subject to capital gains tax, subject to some condition provided under section 54B of Income Tax Act. Now, let us talk about how agricultural income is taxed after amendment in the year 2014. Agricultural income will be considered while computing the income tax of a person if the following conditions are satisfied. First is net income from the agricultural exceed rupees 5,000 for the previous year, and also secondly, total income including agricultural income exceed the basic exemption limit. This method is used to levy tax on agricultural income in an indirect way. This concept is also known as partial integration of taxes. There is a lot of scope for taxing income which occurs from activities which are non-agricultural in nature. In many cases, agriculturists do not have any taxable income. This is due to the fact that when the money from agricultural income is divided among the family members, it falls within the exemption limit in any case. However, many middlemen like distributor, wholesaler, retailers, etc. earn substantial income and claim exemption in the name of agricultural income. These earnings and profit are technically taxable, but due to the loopholes, they are not taxed. If intensive efforts are made by the tax department to recover tax from them, the need of widening the tax base to include these people will be eliminated. So that's all for today's video. Hope you all like it. Thank you so much.